Deirdre, Lincoln National is selling stock to rebuild capital, just one of many companies trying to take advantage of the stock market's rally off the March lows. Monica Bertrand has that story for us.
And Eric, you could call it a little high anxiety among public companies that are racing to sell record amounts of equity to pay back loans and debt or raise capital. Lincoln National, just the latest company to tap the market. The life insurer offered private investors about 40 million shares at $15 each and is planning to raise a total of $2.05 billion by issuing preferred stock, selling about $600 million of common shares and another $500 million in debt. Now, Lincoln National not alone. Dozens of companies are cashing in on the S&P 500's 40% gain since early March. More than 165 companies raised a record $87 billion in secondary share sales this quarter, and 77% of them used the proceeds to slash their debt. Here are a couple of examples. You had Ford, the only automaker that hasn't filed for bankruptcy. It sold $1.6 billion of stock last month. It needed the cash to pay for a retiree medical fund. MGM Mirage issued $1.1 billion of stock to repay debt, and that helped fuel a rally in its bonds. And with these second share sales, companies are essentially choosing to dilute existing stock rather than default on their debt payments. Now, Christopher Garman of debt research firm Garment Research says by focusing on credit quality, companies are putting bondholders ahead of shareholders for the first time since 2003. The companies piled on debt in 2006 and 2007 to repurchase stock and boost shareholder returns, Deirdre, when borrowing costs were at all-time lows.
Monica, thank you very much.